The headline inflation figures coming in at 3%. So this is bang on expectations. Is expected to fall 40 basis points from 3.4%. So this actually coming in to be the lowest level since March 2025. So in a year, we're also getting the core CPI, of course, stripping out that volatile energy and food prices coming in at 3.1%. The expectation was 3% there. So all in all, if you look at that headline figure coming in line with expectations there, this is going to be welcome news for the Bank of England, because the Bank of England is hoping that inflation, or expecting inflation to get to target 2% by April. The question has been about whether it consistently stays there. Of course, some of those budget measures were seen previously as temporary. But overall, if you combine this with the unemployment data that we got yesterday, rising to 5.2%, and that wage pressure coming down, things seem to be moving in the right direction for the Bank of England. And the big question is what it means for interest rates, because it paves the way for a cut in March. So previously, traders had been thinking it would be more or less April, but after that data yesterday, we saw the expectations rise to 80% for a cut in March. Of course, we had a very dovish dovish hold at the last Bank of England decision. So the question is basically when, not if, when it comes to rate cuts. The question is being about the timing of the cut and the quantity of cuts. So we see this big shift of the Bank of England focusing from inflation now to the demand side, to the unemployment, and what we're seeing in the unemployment figures. And I spoke to George Buckley about inflation, which, as we mentioned, trending lower. The Bank of England expecting it to return to target 2% by April. But there are questions, again, about it staying sustainably at 2%. Now, George Buckley of Nomura, he's a chief UK economist there. He walked me through what the government policy could mean for inflation, that he also expects it to kind of remain at 2% now, or more or less around with target, along with the Bank of England. Take a listen.
There's definitely some budget implications from what they did last year and also the previous year, so that they are coming through. They will cause a bit of volatility in these figures. But the point is that the Bank of England and ourselves do not expect inflation to pop back up again once those effects have been seen through. So we think that inflation will stay around its target, and so does the bank. So I think that it's encouraging that we are seeing some evidence. But as Andrew Bailey said at the last MPC meeting, he needs to see further accumulation of evidence, not just one-off numbers, further accumulation that wage growth, that price growth is actually moderating, and we're getting down to levels which we can be more comfortable with and which are consistent with the Bank of England's target.
That was George Buckley there, as a chief UK economist there, talking about the inflation, which we've seen trending lower, coming in now at 3%. That was bang in line with expectations. A big question about what it means for rate cuts. It seems to be bringing forward the expectation that we get a rate cut in March.